Warm welcome to the month of July, and the second half of 2017 is great to be back on the block as we kick off another Business and Markets Week. I am Bosun Emefiele, and this is your Business Morning starting right now. Welcome to the second half of 2017, a full throttle rollout of budget 2017 capital expenditure spending. As promised by the Ministry of Finance, we're expecting about $500 billion or about 500 billion naira to hit the markets any moment from now. That is expected as part of the capital expenditure first tranche in the second half of the year, that the government looks whether the 2018 budget will be fully put together. Meantime, the ERGP, that's what you call the Economic Recovery and Growth Plan, we're expecting the full implementation of that from the Ministry of National Planning and Budget under Senator under Udoma, and we want to have the details of that in the second half. What's the deadline? Of course, for MDAs to submit all 2018 budgetary proposals and assumptions to the Ministers of Finance and National Planning, according to one of the executive orders signed on the May the 18th by the acting president, Yomi Oshibajo. All MDAs are to submit their 2018 proposals no later than July the 31st. So today is the 3rd, about 28 days more for the compliance of this, and that will kick off the 2018 budgetary appropriations process. And the key question, will Nigeria exit recession fully in the second half of 2017? Economists at FBN Quest in a PMI report this morning says they're expecting Nigeria's GDP to return to positive territory, a growth of 1.6% year-on-year in the second half of 2017. That's part of the conversations we're starting today, the first full trading week in the new month. Now let's take back a few steps back to the month of June. The Central Bank of Nigeria over the weekend released the manufacturing and non-manufacturing data for the 6 months of the year. The Central Bank reporting June manufacturing or PMI reading at an increase to 52.9. That's at least yet above water. That's the third straight month of growth for PMI. 12 of the 16 subsectors surveyed by the Central Bank Analytic Group's post growth in June, led by the sectors you see there on your TV screen: computer and electronic, paper products, plastics, and there's a typo there. I get that in there. There's a plastics and paper, primary metal, transportation, leather and footwear, and furniture. Those were the game changers as far as the manufacturing PMI was concerned in the month we just finished. The flip side was the non-manufacturing PMI, which deals with services and other parts of the economy. That index reading was 54.2, higher than the month of May. That's the second month of growth, business activity reporting, new orders, employment, and inventory growing at a faster rate. That was what the Central Bank reported overnight. And this is some of the core economic news we're starting the new month of July with. If you add the PMI from the FBN Quest, which is one of the investment and securities firm, what the PMI reading from FBN Quest reports now. Okay, thank you, folks. Quick fingers. That's the manufacturing index showing, quote, another improvement from 54.0 reading in the month of May to 55.9%. 55.9 reading, I beg your pardon. That's at the doorstep of 60. That's a lot more higher than the broader and bigger basket of sub-sectors monitored by the Central Bank. FBN Quest has just a very smaller basket. 4 out of 5 sub-indices picked up in June, according to FBN Quest this morning, and all of them were in positive territory. According to this report, companies told FBN Quest, these are big, mid-cap, small companies, told the analysts or the economists that there's an improvement in power supplies. Now, this report, and I'm going to quote this sentence, says, this may prompt skepticism in some quarters, although we point out that our respondents are spread across all 6 geopolitical zones. So this report from the FBN Quest says across Nigeria, there were companies were reporting improvement in power supplies in the month of June. Take it away. Let's go to the next one. Okay, now 2 positives for manufacturing in the month of June, according to this new report. Still red hot in our email box this morning. It's the greater FX availability for raw materials, all thanks to the central bank weekly rapid interventions, multi-million US dollars. We've done north of $2.5 billion since the third week in the month of April, when the central bank opened the investors and exporters window, of course. And the twin positives for that is the Naira appreciation at the parallel market. I've been a little bit away for a few days. I need to check what the Naira dollar is doing this morning where we're starting off. So, in conclusion, FBN Quest report says the economy, Nigeria's economy, is emerging from recession, and the folks at FBN Quest sees a recovery in GDP growth to 1.6% year on year in the second quarter that we're starting firmly today, Monday, the 3rd of July. Welcome to the new month. So let's kick it off and look at what this new month will likely look like in terms of a few economic and business markets calendar that we have. Of course, road close. That's the sign you're going to see around the Apapa port from July the 7th. It's going to be a long closure for the repairs that the government has put in the hands of the private sector to repair the roads, the decrepit roads around the country's premier seaport. Okay, now what's the next one? The Securities and Exchange Commission is holding a meeting this week with the interbank settlement system called NIBS, company secretaries and other stakeholders to further the easing of new e-Dividend platform. We've got the SEC's head of market development, one of the directors. He's sitting in our Abuja studios and is joining us in the next couple of minutes to put some flesh on the deadline that's been extended till December 31st, 2017 for e-Dividend payment. Meantime, the first half economic and markets numbers will be out. We're getting a June PMI. We should get a broader one in the month. First half, second quarter earnings from the market from next week, in particular the banks, and of course, you're not going to miss the Central Bank Monetary Policy Committee meeting. This is going to be the fourth one, is it? In the new year. The first was in January. They had March, then they got May, they got July. That's going to be the fourth MPC for the year. About 6-7 MPCs in a year. This month is going to be very crucial as well for the central bank. Okay, so let's do a quick rundown of the markets. Where did we finish off last week? This is what the numbers